Well, howdy there, folks, and welcome into 77-degree Las Vegas, Nevada here. Just received a very interesting email to my inbox a few hours ago. It says, must reads Tesla. Don't be fooled into buying the dips. I just received this email. I want to read through it. It's very in-depth. I want to read through it with you guys, and kind of react to this. I am a Tesla shareholder. I have several $100,000 invested in this stock, and I'm always willing to hear others' perspectives on any stock I own, positive, negative. Doesn't mean I'm going to agree with it, as I'm going to probably disagree with a lot in this article here today. But nonetheless, I think it's important to just understand all the cases, the bear case, the bull case, and why I shouldn't be buying this stock. And we're going to, react to this. And let me know your opinion in the comment section if you think investors should be buying Tesla stock, let's say over the next, let's just call it a few months, or if they should be staying away or selling the stock or just holding. I'd love to hear your guys' opinions and perspectives in the comment section. I'll definitely be reading through those. Now, if you were not already aware, okay, here's the deal with Tesla stock. I don't know how many people even know how bad it's gotten with Tesla stock in the past 1 month. So in the past 1 month, in regards to Tesla stock, the stock price has fallen 31.4% in the past 1 month. That's insane. I mean, for a mega cap stock, like $100 billion plus company, to fall that much in 1 month is ridiculous. Never mind a $500 billion plus company. 31, I mean, that's a move you would expect from a penny stock. 31.4% down in 1 month, you would think, oh, that's got to be some penny stock making that move, because that's the type of move penny stocks make, to be quite honest. So this stock has gotten absolutely obliterated, to be honest, right? And that's why, this one's obviously a very divisive stock. It always is, but right now it definitely is, because people are looking at that and they're trying to think to themselves like, is this a moment where we should be buying or not buying, right? So yeah, I hope you guys enjoy this as always. I appreciate everybody that's joining me for the reactions. As always, we usually react to videos, but today's an article. 16,000 plus subscribers now on the channel. Thank you everybody for being here. Also, if you're looking to join my private stock group, that will be the pinned comment down there, and you can get access to our Tesla Discord chat, our Palantir Discord chat, and all the other fun ones, as well as every single course curriculum I've ever put out in history. Essentially, you can get access to that. That will be pinned comment down there to apply to join us in there. Alrighty, guys, let's get into this. Tesla investors are likely still nursing their wounds after seeing the world's leading EV maker stock fall back to retest its May lows. As we posted in a post Q2 update sell rating, we had urged investors to capitalize on the rally toward its August highs, to cut exposure, as we postulated that the market was setting up Tesla for a steeper decline. Accordingly, Tesla has underperformed the S&P significantly since our update, losing more than 25% compared to the S&P 500's 12.2%. Well, it's more than that, by the way, now. We deduce, I love the fancy words they're using here, okay? We deduce that Tesla is likely at a near-term bottom. Okay, interesting. As the market forced weak holders who bought in the summer to give up their shares. Hence, some long-term Tesla bulls could feel the urge to buy the dips, expecting Tesla to recover marketably moving forward. However, we urge investors to be cautious about making that assumption, even at current levels. Our analysis shows that the market is already derated Tesla, so its premium valuation is set to digest further. Okay, all right, so they're setting things up here, okay? Moreover, with a global recession that could likely put pressure on consumer discretionary spending, Tesla might not have what it takes to sustain its growth premium at these valuations. Furthermore, BYD company has been making significant inroads in China, overtaking Tesla as the largest NEV maker. China's leading EV makers are also penetrating Europe aggressively, intensifying their competition against Tesla, even as it ramps up production for the money furnace, Giga Berlin, which is actually a term Elon Musk actually put out there. Okay, so it's not this gentleman's putting that out there. We discuss why we believe the market would likely continue to force further sell-offs in the medium term against Tesla's unsustainable valuation multiples, regardless of what happens with Elon Musk's Twitter deal. Notwithstanding, given the likely near-term consolidation in current May retest, we believe the market could draw in dip buyers to stage a short-term rally before punishing Tesla holders further. As such, we revise our rating from sell to hold for now and urge investors looking to reduce exposure at the next rally. Okay, that's interesting. So Interesting. We revise our ratings from sell to hold, so it's not all insanely bearish, right? Don't be fooled by Tesla's. If you're wondering what NTM means, it means next 12 months, okay? Next 12 months PEG ratio. We often repeat it that the market is not dumb. Interesting. Obviously, it knows that Tesla last traded at a near-term PEG ratio, this is price to earnings growth ratio, of less than 1, which is usually a pretty good sign. Note that Tesla's near-term EPS is estimated, or not near-term, next 12 months EPS is estimated to increase by more than 50% year over year against a next 12 months PE ratio of 44.1, resulting, which by the way, for the next 12 months, so basically that's a forward P ratio. Next, NTM, you could basically just call it forward P. They should have just done that. It would have been simpler instead of confusing people with NTM. Forward P ratio of 44, resulting in a forward PEG of 0.88, which usually is very attractive. I mean, if you can find PEG ratios under 1, especially for companies that have a very bright next, let's just call it 10 years in front of themselves, it's usually actually a pretty good sign on a valuation basis that you're finding something that's actually fairly undervalued. Hence, some Tesla bulls were calling out the market's foolishness in forcing Tesla down to its May lows, as it's too cheap for its growth cadence, okay? So I got to say, in my opinion, if you're looking at a forward PEG ratio, that's actually really, really compelling when you're talking about under 1. Very, very compelling. And it's been a while since Tesla's looked, I think, undervalued. And actually, this is one of the first times I've seen Tesla in actually probably the past year and a half to 2 years, as it looks like actually an undervalued stock for once, which is actually quite interesting. We urge investors to remember that the market is forward-looking, just like how Tesla outperformed the market significantly over the past 10 years. 10-year total return, CAGR, 61.1%. Okay, that's compounded annual growth rate, 61.1%, even though it was free cash flow negative through fiscal year 2018. We believe the market looks way ahead for solid high growth stocks in their ability to assume market leadership. True as far as definitely all that goes, but remember, Tesla stock didn't do anything for almost 6 years. So that's the part that I think people forget, is from about, it was about 2014 through all the way 2019, that stock did nothing. At least part through 2019, it did nothing for years. And so I just think that's important to remember. And you could say, well, did the market really get it right? That the fact that stock didn't move for like 5 or 6 years? Did the market get it right? But there was also dilution that went on during that period. So, there's many various ways you can kind of deconstruct that. But clearly, maybe the stock should have been at least doing something decent during those years, right? Early Tesla investors are undoubtedly made a considerable fortune in Tesla. Thank you. I call this the house that Tesla built, thank goodness, okay? Made a considerable fortune in Tesla by placing their conviction in CEO Elon Musk and in the team. It wasn't just that. I feel like a lot of times they try to chalk us up as like we just put our faith in Elon Musk and we're like, take our money. No, it was the product. For me, I'll speak for myself. It was the Model 3. That's what changed everything for me with Tesla. I kept an eye on Tesla for basically since the company went public. And I remember still going to a Tesla store back before I even knew what Tesla really was. And I remember seeing the Model S. This is back when they didn't even have a full Model S in the store. They only had like the bottom part, the battery part of the Model S in a store. And just be like, oh, that's pretty cool. And I kept track of the company and its growth over the years. And I watched them come out with the Model X and obviously Model S over the years and things like that. But when I saw Model 3, and when I saw the demand for Model 3, and when I saw the media coverage, and when I saw how much people were talking about this, and when I saw the product, that for me was the game changer. And that's why I started getting into stock like 2018, 2019, because I saw that. And then I started seeing in the real world, and I was like, oh, this is huge. Like, this company's going to be a game changer, and they're going to, just absolutely just get massive, massive quantities of market share over time, okay? So, yeah, the whole let's just throw money in an Elon Musk project, that wasn't my perspective. I can't speak for others. However, with Tesla's growth rate set to fall marketably through fiscal year 2025, we urge that investors to revisit their growth assumptions. That means Tesla's earning multiples must come down significantly to justify much slower growth ahead. Here's why. Okay, this is important. As we've seen above, the street's consensus bullish estimates still expect Tesla to post basically a forward adjusted EPS growth of 52.4%, well above SPY's revised 7.1% growth. So that's, gosh, what is that, a 7x? That's about a 7x, just over a 7x, in terms of EPS growth versus the market. So if you think about it like this, okay, this is important. If Tesla's going to grow 7x, right, then it should command about a 7x multiple versus a market, right? So let's say the market in general is trading at a 20p ratio. Then in that situation, Tesla should trade at about a 140p ratio, something like that, right? Because you're basically got a 7x the 20 there. Now, a lot more goes into that. What's the growth past that year and things like that, right? So there's a lot of various factors, but if you were just look at it on a simple basis, 7x growth, okay, 7x multiple of what the market trades at on average, right? So that's definitely a way you could look at it. And if you thought that was true, right? Well, then Tesla would once again be undervalued, because right now Tesla's probably at a P ratio. It's at a forward P ratio about 44, but the trailing 12-month P ratio, if I recall, is at about a 95 right now. So that would mean it's actually undervalued versus the market currently. We will know in the coming week, as Tesla reports its Q3 earnings release, October 19th, whether these estimates are still too optimistic. Given worsening macro headwinds and a Q3 deliveries cadence that has underperformed, however, these estimates have likely reflected its weaker growth momentum in Q3, as a revised EPS estimate suggests growth of 64% year over year, down from August estimates of 71% growth. That's still insane growth, by the way. I mean, sometimes we get so caught up in is it this number, that number? It's just so ridiculous. As such, investors should expect Q4's growth to normalize further, potentially matching the pace seen in its relatively weaker Q2. Hence, we believe that may have given investors the false impression that the worst may have been priced into Tesla. Think again. As seen above, the consensus estimate also project that Tesla's adjusted EPS growth could slow marketably through fiscal year 2025, resulting in EPS CAGR of just 18.8%. Once again, compounded annual growth rate through 2025, fiscal year 2025. Hence, it's a significant deceleration from its current cadence, which investors are urged to pay attention to. Okay, intriguing in regards to that. I mean, there's so many puts and takes there, and I think trying to figure out exactly what Tesla's EPS is in the next year or two, I think it's extremely difficult. I think that's for bulls or bears, to be honest, in regards to Tesla stock. I think, in my personal opinion, to try to figure out Tesla's EPS in the next 1 to 2 years is like throwing darts at a dartboard. You can do it, and maybe you hit a bullseye, but I think it's extremely difficult. There's so much going on right now that can screw up numbers. From Tesla ramping factories, they're going to be likely ramping Cybertruck, likely within the next 6 to 12 months. Obviously, they've got several different gigafactories at several different stages of their growth cycles. Tesla's also gone up on products, so how does that factor in, right? They've gone up on almost all their vehicles over the past 6 to 12 months, and sometimes several times. They've also gone up on the autopilot system, right? So how does that factor in, and what's that do to margins? Supply chains are a mess, right? Freight cost was ridiculous. To try to ship cars overseas was insane like 6 to 9 months ago. Now that's come down massively. So, I mean, there's so many things that are like good things that are going for Tesla right now, but also bad things. I think, I think it's predicting Tesla's EPS for the next 1 to 2 years, I think is one of the most difficult things you could possibly try to predict, because it is a very confusing environment, right? And I think, honestly, most bulls and bears will likely get it wrong if they're trying to even predict Tesla's EPS over the next 1 to 2 years. In contrast, the SPY is expected to recover its near-term weakness through fiscal year 2025 with a compound annual growth rate of 13%, up from its forward EPS estimate, EPS growth of 7.1%. If that's not enough, consider that Tesla's consumer discretionary peers are expected to notch a 5-year EPS compound annual growth rate of nearly 29%, according to estimates, we'll see, with a next 12-month PE of 23.2. Okay. So Tesla is expected to grow much slower than its sector over the next 5 years, but it's priced at a much higher premium at the current levels. Is that sustainable? We urge Tesla bulls to be very cautious here, they say, okay? You know, I don't necessarily agree with a lot of this. And, you know, especially in regards to trying to say they're only going to grow at a certain number while other peers are going to grow at 29%. It's like, what peers are we really talking about there, to be honest? And, you know, I mean, this might be unrealistic, but I could start a car company, right? And I sell one vehicle, let's say, you know, this year, and then next year I sell 10 vehicles. And so I 1,000x my revenue and my growth rate and things like that. And everybody's like, ooh, you're destroying it, Jeremy. You're doing amazing, right? It's like, okay, you know, did that really add up to that much? So if you're trying to compare it versus peers, I don't know whether that's Rivian or whoever, okay? You know, I don't really think those other peers should be necessarily comped against Tesla, just to be quite honest. It's no disrespect to any of those other companies. It's no disrespect. It's just, you know, it's almost like going back and trying to say, okay, BlackBerry sells smartphones. You know, so say we're going back a decade ago. BlackBerry sells smartphones. Apple sells smartphones. So Apple and BlackBerry, you know, what if BlackBerry grew faster 1 year in their smartphones, which I don't think they ever did. But what if they did? You know, should that mean BlackBerry should have been valued more than Tesla? I don't think so. So, you know, you got to look at the competitive positioning in the marketplace. I think that's very, very important. Otherwise, you can kind of get lost into just the numbers, to be quite honest, and that's not usually a good situation. Morgan Stanley highlighted in recent commentary that Tesla's margins could have peaked or peaking. It added, Tesla's passing through peak margins right now, with headwinds ramping into year-end. Namely, the costs associated with 2 gigafactory ramps are expected to hammer the metric. Okay, so that could hammer the metric, let's say, short-term, but what about once those factories are ramped? Think about that for a moment. Then what happens to margins? So are we talking about the margins have peaked for the next 1 year, or are we talking about the margins have peaked for the rest of Tesla's history, right? I think that's a very important thing to think about. The consensus estimate indicates that Tesla's gross margins are expected to peak in fiscal year 2023 before falling through fiscal year 2025. Hence, it's expected to affect the growth cadence of its free cash flow growth, suggesting the market should derate Tesla further. Man, okay. I just don't know if we can say, oh, Tesla's margins have really peaked. I mean, maybe it's possible, but has anybody factored in the possibility of Tesla having those other factories ramped, what that's going to do for the business model? Have they thought about that, right? And how margins could be hurt by that? Has anybody thought about how margins have likely been hurt from, in regards to Tesla, from supply chain mess, from shipping of product being at sky high rates? What happens as all that stuff comes down? What happens the fact that commodities have been in a massive super cycle, that all commodities have come down, and some of those commodities go into Tesla cars, and so some of the costs that go into making a Tesla vehicle could actually likely be coming down over the next 12 months? Have we factored in the fact that Tesla's arguably the best company we've ever seen in history at reducing cost in a considerable way, in finding smarter and better ways to run their business, right? And build cars for cheaper while still having just as good of a product? So, I mean, there's so many puts and takes here. I think it's almost ignorant to just say Tesla's margins have peaked and they're just going to go down in future years, because I don't think that actually looks at the full story, to be honest, in regards to Tesla. And, Tesla's hit margins that I'm a super Tesla bull, right? And I never saw them getting into some of these margins they've gotten to over the past few years. So, when somebody that's ultra bullish on the stock has had their estimates blown away, I think it's just something to think about. Like, maybe, this company's a little good at running their business. Maybe just something to consider. Our analysis suggests the derating has already started for Tesla. The market is smart. Okay, that's interesting, as it anticipates that Tesla's growth premium is not sustainable. All right. Tesla has been derated by the market. As seen above, Tesla has kept up with its next 12-month free cash flow trend since March of 2020 bottom. However, the trend has started to deviate, even though it's expected to post free cash flow growth of more than 90% in fiscal year 22. That's just ridiculous, man, ridiculous. As we indicated in our earlier discussion, The market is looking way ahead and does not expect the leading EV maker to maintain its growth cadence. Hence, Tesla bulls must expect further value compression to digest its growth premium and bring it closer to its auto and sector peers. Intriguing. I don't think that's where the market's taking this. I don't think that's at all. In my personal opinion, why is Tesla stock falling? Because that's what we're kind of getting into in that debate. And is it a derating of the stock? I don't think so. I think it's the fact that Tesla's a higher valuation name. Interest rates have gone up a ton. The market's looking at that and they're saying, I don't know if as many people are going to buy Teslas over the next year because interest rates have gone up a lot. There's a lot of worries about the economy and those sorts of things. And therefore, we're scared about probably, honestly, the whole auto sector over the next year and Tesla being part of that, right? And when you're a very high growth stock like a Tesla, if you miss some growth numbers, right? That's when your stock gets absolutely hammered. Is when you're a growth stock, you can't ever miss numbers. If you miss numbers, that's when your stock starts getting slashed, right? And you look what's happened with, look at a Shopify is a perfect example. They didn't hit their numbers, and where's that stock? Down 80% plus in year to date. It's incredible, right? You look at a Amazon stock that's a growth stock. As soon as they didn't hit some numbers, boom, that stock got hammered. And that stock, Amazon's probably down, I would guess, 37 or 38% year to date, roughly, getting close to a 40% drop in that one. So if you're a growth company and you have a high valuation, which Tesla does, you have to come in and beat number after number. And there's a real worry that Tesla might not beat numbers over the next 6 to 12 months. And therefore, people want out of that stock. It has nothing to do with we need to get it closer to its peers in the auto sector. Nothing like that, in my personal opinion. That isn't, I don't even think that's the right frame of thought to think about Tesla, to be quite honest, okay? Now, as seen above, Tesla is priced at a fiscal year 2025 earnings multiple of 26.1 at the current levels, which is still way high compared to the S&P 500's next 12-month PE of 15.1. No, in all due respect to the one that wrote this article, no. I mean, that's ridiculous. Tesla shouldn't even be remotely close to trading at where the market's trading at, unless you really think Tesla's going to grow somewhere in line or just barely slightly better than the market's going to grow over the next 5-10 years. Tesla's going to massively outgrow an average S&P 500 company. That's just ridiculous. Like if you, what do you think's going to grow more over the next 5-10 years, right? Walmart or Tesla? Top line, bottom line. I hope you said Tesla, and it's going to be in a massive, massive way. It's not even going to be close, right? So that's just ridiculous in my personal opinion. In all due respect. Also, according to the S&P Cap IQ data, S&P's next 12-month PE of 44.1 remains well above its auto peers median of 3.6. Once again, that gets into the same argument we've had in Tesla stock since the beginning of dawn, okay? Which is, why should Tesla be valued at this number versus their auto peers at this number, right? And yeah, I feel like that's not even a debate I can even talk about nowadays. Like, that was a 2018, 2019 debate that was just ridiculous. And no, okay, Tesla has ridiculous growth. The other automakers are trying to pivot their business models to do something they've never even done. I was watching some college football last night, right? And I saw several commercials for automakers, traditional automakers, right? One was for Mercedes, another one was for GM, and what were they advertising? EVs. They weren't advertising their traditional vehicles, they were advertising EVs and spending that money advertising EVs that they're probably going to sell for massive losses, right? Because they're all trying to pivot their business models to be the wave of the future, which is EVs. And they're doing this while, likely losing money on these vehicles and spending all this marketing money, right? And we're not even sure if anybody's going to want their EVs. That's the thing. Like, we don't know. Just because people wanted their traditional vehicles, how do we know people are going to choose their EVs, right? And all that marketing and all those advertising dollars these companies spend on EVs and getting consumers to think about, oh, maybe my next car will be an EV. Guess where the conversation comes back to? Tesla. Who's the EV maker? Tesla. So now they're putting in consumers' minds by running all these commercials, EV, EV, EV. So now people are thinking, oh yeah, maybe my next car will be EV. But they're not going to think about buying that Mercedes first. They're not going to think about buying the Chevy or whatever other one I saw the other night, or GMC or whatever it was, EV first. They're going to think about Tesla. Then they're going to come back to that, and then they're going to compare and think, do I want Tesla, a company that actually does this, or do I want somebody that doesn't do this, right? And then they're going to have to consider. And so that's just very powerful. It's like they're basically marketing for Tesla. And, Tesla doesn't have to spend any money on advertising because these other automakers are basically going to advertise for them over the coming years. And that's kind of a beautiful thing, right? There's a significant growth premium embedded in Tesla's stock chart that can't justify slowing growth even at current levels. Moreover, we believe the market should be looking at further digesting Tesla's fiscal year 2025 earnings, given the highlighted risk of global competition as legacy OEMs, original equipment manufacturers, and China's leading EV makers ramp production further. Hence, bringing Tesla's fiscal year 2025 multiple down by at least another 30% to 40% is not unthinkable based on current estimates. Okay, I won't make that argument again, okay? Is Tesla stock a buy, sell, or hold? Given the steep sell-off in Tesla from its August highs to retest its May lows, we are satisfied that its near-term downside has been reflected. Nothing falls in a straight line. Hence, we expect a consolidation at the current level to draw in dip buyers, potentially leading to a short-term rally before meeting significant selling pressure. Our analysis suggests that Tesla has likely lost its medium-term uptrend decisively with August rejection against its 50-week moving average blue line, validating our thesis. Hence, investors are urged to consider our view that the market has derated Tesla and sees further compression in its valuation as necessary to de-risk its execution risk through potentially slowing growth. Okay, let's finish this out and I'll give my last closing remarks here. Buying the dips against a decisive change in trend is not recommended, and investors should wait patiently for its next rally to cut further exposure. We expect a subsequent retest of its intermediate support, 20% downside, wow, with an eventual bottom in between the support and intermediate support 2, up to 50% downside. Wow. Hence, we urge investors to be cautious about adding more exposure at the current levels. Instead, they should wait for the next rally to cut more exposure, basically saying sell the stock. That's a fancy way of saying sell the stock on the next rally, and let the staunch Tesla bulls catch the falling knives, they say, okay? Accordingly, we revise our rating on Tesla from sell to hold. So they're basically saying it's a hold, right? But they're also saying the next time Tesla rallies, sell your shares and don't buy anytime soon, essentially, okay? So, my 2 cents on this is if you are a long-term Tesla bull, I think you have to be adding shares over the next 6 to 12 months if you don't have a position built or you have a position built and you want to build your position bigger. I think the next 6 to 12 months, I just don't think there's a lot of moments you're going to have to, build a Tesla position in a substantial way other than maybe the next 6 to 12 months, to be honest, right? So I think that's out there. I think if you're good with where you're at with your Tesla shares, then it's just kind of a hold from here. And there's no point in trying to trade Tesla stock in and out. When it comes to great companies, companies in general, you shouldn't be trading in and out of, right? But especially great companies, you don't try to trade in and out of those. It's just usually not a smart game to play. And you have to try to time it right on both sides. It's not worth even taking that risk and going down that route there, in my personal opinion. As far as Tesla's valuation, I think it's actually at compelling levels for the first time in quite some time, to be honest. And if it falls even more, even somebody like myself that I haven't been a buyer of Tesla in years, literally years, I haven't been a buyer of Tesla. If the valuation keeps coming down more, even somebody like myself is going to start stepping in and buying Tesla shares. And like I said, I haven't bought this stock since, it was either 2018 and 2019. I think 2019 is the last time I've actually bought shares of Tesla stock, which is crazy to think about, right? When I start buying Tesla again, it's really undervalued at that moment, right? And I, if this stock falls much more, I'll be there. So, I did a full video on the main channel, if you didn't get to see it, Financial Education. For those that don't know, I have a big channel. It's called Financial Education. You type it in on YouTube. I did a big video late last night. I released it at like 2 a.m., so not that many people got to see it, unfortunately. But that video goes all into what's going on this week. And it also goes into Tesla earnings and my expectations for Tesla earnings, okay? So if you didn't get to check out that video, check that out on the main channel. You definitely enjoy that, okay? Once again, if you're looking to join us in the private stock group, check out the pinned comment down there to apply to join us on there and get access to our Tesla Discord chat, our Palantir Discord chat, all the other stocks Discord chats, and also all my course curriculums I've ever done in the history, okay? Much love as always. Thanks everybody who subscribed, and have a great day.